Should I use a cryptocurrency exchange, and what are they? Are questions I commonly hear when people are starting out with crypto. I'm going to take you through some of the different types of exchanges that are available. And I'm going to explain a little bit about how wallets fit into this. There's two types of exchanges. There are centralized exchanges and there are decentralized exchanges. And you know I've spent the morning whiteboarding it. So with exchanges, we have centralized, known as CEX, and decentralized, known as DEX. Let's start with centralized exchanges. Common ones are Coinbase, Binance, Kraken, Gemini, KuCoin, Crypto.com. Something you might not know is that when you're trading with a centralized exchange, you're not actually using a blockchain. Centralized exchanges are like their own whole ecosystem. So when you're trading on their platform, you're trading with the tokens that they hold. They're in complete control of that trading experience. Let me take you through the process of using a centralized exchange. You start by joining a centralized exchange, handing over your identification, passport, license, and then you have access to the exchange. You need to actually fund it. So you would need to convert some of your local currency to cryptocurrency so that you can start purchasing. And those funds are stored in a wallet. This is a wallet that's built into the exchange. You then start trading cryptocurrencies, and all of this is managed through what's called an order book. The exchange is managing the transactions and the price of these transactions. Successful trading relies on the centralized exchange's management of this order book. With a centralized exchange, the exchange is the custodian of your currency, your tokens, your investments, and they have to actually protect your funds. Some of the issues are high fees, the ownership issue that you aren't the actual owner of your investments in crypto. They're more susceptible to hacks, and you must have identification to use this system. Now coming over to decentralized exchanges like Uniswap, SushiSwap, PancakeSwap. Decentralized exchanges are really cool because they've basically been set up in a way that all of the trades are done from peer to peer. There is no centralized entity, and they're using the blockchain for all of these transactions. Centralized looks like this. Decentralized looks more like this. Let's follow the process. So you want to trade with the DEX, you connect your wallet to the decentralized exchange. You need to make sure there are some tokens in there to trade. To successfully trade on a decentralized exchange, you are trading between different peers. This trading experience is supported by what's called liquidity pools. Liquidity pools are created when investors lock up their funds to get extra returns. This token lockup gives security and liquidity to these trades. You can on-ramp from fiat to crypto, but you can't off-ramp with decentralized exchanges. You trade crypto to crypto. It offers you a limitless range of tokens. You often get early token access. There is significantly reduced hacking risk because it's relying on smart contracts and not people. You have anonymity. The issues are poor product experiences and lower trading volumes. That's exchanges.